With UK house demand improving despite market uncertainty over likely tax changes in this month's budget, prices increased by 0.6% month-on-month in October, pushing the average cost of a UK home to a record high of £299,862, according to Halifax. This marked a reversal from an unexpected 0.3% drop in prices recorded in September, and was stronger than the 0.1% monthly increase forecast in a Reuters poll of economists. On an annual basis, house prices also rose 1.9%, surpassing forecasts for a 1.5% rise. Property websites Rightmove and Zoopla have reported falling demand from both buyers and sellers, particularly at the top end of the housing market. But wait, what is really happening in the UK's housing market? Well, we will take a look at what is actually happening in the UK housing market this October that is changing prices and causing a lot of uncertainty. But before we get there, please subscribe to our channel and ring the notification bell for upcoming updates. Let's delve in. What's happening in the UK housing market? The latest Halifax House Price Index shows Northern Ireland continues to post the strongest rate of annual property price inflation, with average values up 8% annually. The typical home now costs £219,646 in the country. Scotland recorded annual price growth of 4.4% in October, rising to an average of £216,051, while average prices in Wales rose 2% to £229,558. The North East recorded the highest annual growth rate in England, with property prices rising by 4.1% to £180,924. However, London and the South East saw prices fall slightly in October on an annual basis by 0.3% and 0.1% respectively. The capital remains the most expensive part of the UK, with an average property now costing £542,273. There is no doubt that affordability remains a challenge for many. Average fixed mortgage rates are currently around 4% and likely to ease down further, but with property prices at record levels, moving home can feel like a stretch. Rising costs for everyday essentials are also squeezing disposable incomes, affecting how much people are willing or able to spend on a new property. Even so, while there has been some volatility, the market has proven resilient over recent months, as many buyers opt for smaller deposits and longer terms to help make the numbers work. With house prices rising more slowly than incomes for almost 3 years now, we expect the trend of gradually improving affordability to continue. The latest Halifax figures show that despite a degree of buyer hesitation in the lead up to the autumn budget, the housing market continues to move forward, with prices recording another month of positive growth. This resilience reflects the depth of underlying demand, as well as some confidence from buyers following a period of greater stability in mortgage rates. With inflation holding firm, there is a very real prospect of a base rate cut before Christmas, which would further bolster affordability and positive sentiment among buyers. HMRC monthly property transaction data show UK home sales increased in September 2025. UK seasonally adjusted residential transactions in September 2025 totaled 95,980, up by 1.1% from August's figure of 94,910, down 2.4% on a non-seasonally adjusted basis. Quarterly seasonally adjusted transactions from July 2025 to September 2025 were approximately 17.8% higher than the preceding 3 months from April 2025 to June 2025. Year-on-year SA transactions were plus 3.7% higher than September 2024, plus 7.9% higher on a non-SHE basis. Latest Bank of England figures show the number of mortgages approved to finance house purchases increased in September 2025 by plus 1.5% to 65,944. Year on year, the figure was plus 0.5% above September 2024. Source: Bank of England, seasonally adjusted figures. The RICS Residential Market Survey results for September 2025 indicates continued weakness in the sales market. New buyer inquiries posted a third consecutive negative net balance of 19%, slightly down from 18% in August. Agreed sales improved to 16% from 24%, while new instructions remained in negative territory for the second month, at 15%, previously 4%. Will house prices rise again before the end of 2025? House prices had a boost in the early part of 2025 as buyers rushed to beat changes in stamp duty thresholds at the end of March. But demand has been dampened in recent months amid high inflation and concerns of tax rises in the autumn budget and rumours of stamp duty reform. Fears of a Mansion tax as well as already higher tax rates in prime London have also driven many wealthy buyers away. This has prompted analysts from brands such as Savills and Knight Frank to revise their house price forecasts. Savills predicted this week that average property prices will grow by just 1% this year and by 2% in 2026, down from a previous prediction of 4% growth next year due to current economic and tax concerns. Tom Bill, head of UK residential research at Knight Frank, said, "Stable mortgage rates have supported demand in recent months and the bank rate is now on a downward path. But a tax-raising budget will curb buying power and weigh on sentiment, keeping a lid on housing market activity next year. Beyond the fallout of the autumn budget, the direction of the market may depend on what the Bank of England does next with interest rates." But Dittins added, "Regardless of what the Bank of England decides next month, we expect the UK property market to finish the year on a strong footing, as many buyers and sellers still push to complete before the end of 2025 or wish to head into 2026 with a renewed focus on their property goals." What are your thoughts on this? Please share with us in the comment section below, and don't forget to subscribe to our channel for more updates. Have a great day.